Good afternoon. It's Graham Norris, and today it's the 9th of August. And today I'm going to talk about it's easier than you think to get into multifamily. Um, as as you know, I've embarked on this new chapter recently in specializing in the large multifamily niche in real estate. And for those of you who might have read my book, Cautionary Tales from Real Estate Investing, the first time round I invested in small multifamilies, had over 100 doors at the point, my highest point in the business. And they ranged anywhere from 5 units to 32 units, at a 30, at a 12, numerous apartments there, and I've outlined them all in my book. And the reason I wrote that book is because I made lots of mistakes. And as I've mentioned earlier on an earlier call, I found myself a few weeks back in the classroom. It was a 3-day event teaching on large multifamilies. And I must be honest with you, I went in with very low expectations. I've done many real estate courses in my time, spent well over 6 figures on my education, in fact, and I kind of know how they work. They kind of upsell you a program, and really it is mainly education, and you need a lot more than that, especially in the niche of large multifamilies. So my expectation was low, but I think within the first few minutes of the presentation, my mind began to change. Because one of the main things that it addressed was that you don't need money to get into the large multifamilies. Not personally, anyway. You do need money to actually buy them. But here's the thing, when you do find a good deal in real estate, and this applies to anything from a single family to a large multi-family complex, if it's a good deal, the investors will be there. It's you don't have any worries there because people are literally crying out for a place to put their money. Because one of the sure ways of losing money over time is having it in the bank. It is useless. It's dead money, and well, at least to us it is. To the banks, it's great. You know, that's their business, and they make a lot of money from just us giving them, and we're not even doing anything else other than giving them the money, and then they lend on it, and that's the clue. So we can do that. We can find people, join people together, and put these large multifamily uh, apartments into our portfolio and have ownership with no money out of our own pocket. So it really is easier than you think. And that's the theme of today I want to talk about. And there's many roles to play. As with any niche in real estate, it is a team sport. It's cooperation, it's who you know, and it's developing deep relationships. It's all about networking. So if you're really good with people, you'll have a flying start because that's most of it. It's not the knowledge. You'll gain the knowledge over time, and as you play the game, you're going to increase in your skills and so on and so forth. So the first thing I would say is the money side of it. So one of the roles in large multifamily is to do the capital raise. That's the job, is to find people who are eager to deploy their money, and they want to do it passively. So a typical LP might be a limited partner, might be a doctor, and they're so busy they don't have time to breathe or even go to the bathroom half the time. Other very busy people like lawyers, for example, especially tax tax lawyers around tax time, you'll see most of them don't have any hair because they pulled it out. And so they're making a decent amount of money, and they don't want it sitting in the bank. So they have two main concerns. They want a good return on their money, and they want to be confident that their money will return to them with a good rate of return. It's a good investment. Often they've been burnt in the stock market. They think that's the easy way to play it. Well, no, it's not. Not even with AI these days, which can lose you a lot of money. So be careful with the stock market. They want something safe. And we don't say safe as houses for no reason, right? It's a safe investment. Has been proved now for hundreds of years that over time, real estate will appreciate. And here's another fact. Everyone's got a roof over their head. Well, I know there's homeless, but even they have shelter or given shelter. And there's a building that needed to be built by somebody, needs to be managed by somebody, was purchased by somebody at some time. So that's one of the roles you can play. You don't need money in your pocket, as I say. You just need to network. Find those professionals who want to deploy the money. Another role you can play in this game is being an acquisition manager, and that's finding the deal. Again, you don't need any money. You just need to know what to look for. So you do need some education and understanding the numbers, how to read a profit and loss statements, trailing 12 months, rent roll, and analyze the expenses on the profit and loss side. Identify areas where you can improve things. Be able to put a team together to manage the property, because these large multifamilies are professionally managed. So we find all the property managers we need, the attorneys we need, and everything else. It's quite a large team that we get put together. So that will be an acquisitions manager. They're responsible for finding the deal, getting it locked up on the contract, and getting it to close. And then another hat you could wear is an asset manager. Now, an asset manager, they manage the project. So they manage the company that's managing it. So the manager of the manager, and they oversee everything that's running well and on target and to the plan that has been laid down. So that's another role that you can play there. And probably the most important role is the sponsor. This guy or gal wearing this hat has got the experience. So they've already done a similar sized asset, have the net worth that is required, which is at least 10% of the purchase price of the property, and understands all the different roles that the GPs, the general partners, play. And that's what I've been outlining. These general partners are putting it together. And then you've got the LPs, the limited partners. These just play a passive role. So they're throwing the money in the pot to actually purchase the large multifamily. So if you do have money to deploy, it's going to usually be a six-figure sum, because these large multifamilies, they're anywhere from 10 million. This is what I'm looking at. You can obviously buy them for less, but we're looking for $10 million all the way up to 100 million and beyond. So it is a significant amount of capital that we need to raise. But one of the things we can do with these large apartment buildings is often the seller is willing to carry a note. They usually don't want that large sum of money for tax reasons in the bank suddenly like that, and then Uncle Sam takes it away. They don't want that. So they're often willing to do creative ways of financing to reduce their tax liability. So another way you can make money when you've got no money in your pocket is to be a connector, is refer. You could play the role of being a capital raiser without actually being in the deal as a GP. You can gather them together, form an LLC, and come with the money. And then we can pay you what's called a connector fee. And yeah, that might be a really good way for you to grow your income that way. So there's many different ways, and there's many other different creative ways that this can be done as well to grow your income. There's plenty of opportunity, and you might think another thing with multifamily that you have to wait forever for your money to grow. Well, that's not the case. These are 3 to 5 year projects. So within the first 12, 18 months, we get it's stabilized. And by that I mean we're able to bring up the rents to full market value because we're offering that value. So the units are renovated and move-in ready. So any vacancies that do come up, we renovate them and then charge the market rate, the fair market rate. And then that increases the occupancy, which increases the value of the assets. We look to reduce expenses, and we look for value adds. So we might add in a coin laundry if it isn't there, or we might do reserved or covered parking and charge for that. We might do a monthly charge on pet rent, or pick up trash, valet services like that, to pick up trash at the door, because most humans, we're kind of lazy, and it's nice just to put your trash outside the door and have it thrown in the dumpster. And you can charge for that. It's amazing. Another great value add is storage, especially a lot of people, they come with more than they can fit inside the unit, and they want to declutter the unit, and then they put in storage, and we charge for that. That adds money to the assets. And so all these things, vending machines, there's numerous ways of adding value, in fact. So you can even do like a little Uber service to take them to work, charge there. That's another way you can do things. So different ways of adding value. And so large multifamily, it's easier than you think. Take a look, because it really is a true way of increasing your wealth in a much shorter period of time. I'd be delighted to assist you or talk to you about this and enroll you on my team, as it were. It's like a virtual team we can put together. You can play a role, and your own boss, and just bring me the value, and you're going to get paid very well. So if you want to talk to me more about this, just simply click on my Calendly link below in the description. Take a look at my Blink card as well, and you see where I'm at, where else I am on Facebook, Instagram, LinkedIn, various places like that. You can link up with me, and I want to get to know you and help you in your real estate investing career. So please connect with me, and that's the end of this session. If you have any questions, put them in the comments. I'll be glad to answer them, and we'll go from there. Have a wonderful day.